Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We have a monster day here ahead of us. So, of course, we have non-farms, but then yesterday the S&P 500 started on a downturn that, well, let's just go and look at the charts. Quite a big downturn yesterday, and the big news was that I forget the name of them, but one of the big banks that has funded a lot of both cryptocurrency and venture capital sort of stuff is distressed. They had to raise like $2 billion in capital, and their stock just got cratered yesterday, and that is pulling the NASDAQ down. So some people are saying that the non-farms doesn't even matter and that the NASDAQ is just going to take a hit today no matter what. We'll see, but you can see here S&P 500 down and bonds up. So this is this isn't the first time that we've gotten a flight to safety risk off correlation. But this is definitely the strongest one of these that we've seen, and was probably a driver behind some of the upside action that we saw, and certainly the action that we've seen overnight. I did not really get a wind of what was going on with this until late in the ES session. So you come over here, you see oil coming down, gold and silver coming up. So this is definitely like copper down, flight to safety, risk off trade across the board. Bitcoin in particular getting savaged and coming back below 20K. I was a little surprised when I was going around on Reddit and so forth. The cryptocurrency people were really distraught about it. Really distraught. And I'm like, it's just back down to like where it was 2 months ago. What's the big deal? But they were like crushed. So like I saw this whole thing that was like RIP bull market 2023 to 2023. I'm like, okay guys, it's not the end of the world. And I find this whole situation really interesting. So they're going after the small regional banks now who would likely have some exposure to some of this. So for instance, they're going after my friends at Zions Bank. I have a kind of a soft spot for Zions Bank, but I was going through a stock screener looking for some stocks after I had to get out of the sumo thing. And, where can I put my money? And Zions was kind of like up there at the top in terms of metrics. I'm like, what's with this? Something's going on there. Well, now I know what it is, but probably now not the good time to pick it up. But if they survive all of this and this just blows over, I think the Zions could be a good pickup. Meanwhile, look at the liquidity in the 10-year. That is absolutely nuts. I was coming in today thinking we could take a big trade and maybe something really happens for us with I don't think I can trade this, man. The liquidity, look at the liquidity in the micro 10-year, completely gone. We're 2 minutes out. This is not going to be a tradable event. We're probably going to have to wait at least 15 minutes after. Okay, so with all that said, what are the numbers we're looking for? Non-farm payrolls, 225 is the expectation. And if it comes out higher, last month it was 517. If we get another really big high number, then this market is just going to get... Yeah, you know that whole like market drops 5% and then 0 day to expiration options push. Well, I guess at the beginning of the day there wouldn't be a whole lot of those, but man, we could get a real bender today, man. This is just primed to just have absolute chaos. 30 seconds. I got all the safeties on. I will not take a trade off of this news. I'm going to give it at least 15 minutes because the The risk is, I'm a little disappointed to have to say that, but that's just the liquidity conditions I think are too stressed for me to be playing in this. We'll play it on sim. How about that? We'll wait 5 minutes. We'll play it on sim. Okay, so interesting. Okay, that does not make sense to me at all. What the okay, US non-farm payrolls 311K versus 225. That is better than expected, but the Treasury's bought. What? US average earnings year over year 4.6 versus 4.7. US private let's see here. US average earnings slightly lower than expected, spot 2 versus spot 3. Maybe they could justify it off of that. Oh, I don't know, man. This is wild. This is wild. Yeah, okay, so I'm on sim here. We're gonna try and play this short. Well, they're rotating around that 22 pretty well. That's interesting. Now the S&P 500 is rallying? What? Is the number that I'm getting here wrong? They gave me a wrong number. 311 versus 225. How is that a buy in the treasuries? I don't understand. I'm so confused. Oh my gosh. Come on, sell that shit. Yes, thank you. Good grief. I get from Financial Juices where I get my numbers. A link in video description. Okay, so just to go back here, U.S. unemployment rate increase. Okay, so U.S. unemployment rate increased to 3.6 from 3.4. U.S. non-farm payrolls was 311 versus an expected 225. So perhaps the spike was because they were reading the unemployment rate, the household survey, as a bigger factor. That's the only explanation that I can come with. And the average earnings month over month was slightly lower than expected at spot 2 versus spot 3. That's good. Okay. Manufacturing payrolls negative 4K. Well, when I said, I was like, we'll wait like 5-15 minutes, see what happens, then maybe we try and play it, sort of a thing. And now I'm definitely at like, there is no way I am taking a live trade today. the mere thought of taking a live trade in this mess just absolutely terrifies me. Now there's a strong bid coming in, man. Did I get 250 at one point? I should have put that other contract out there to take profits, but okay, so there's a spoof that, well, not a spoof, there's a large order. They got filled. Actually, a little bit more trading there now. Curious. There we go. All right. when it turns so quickly, doesn't it? Come on. Come on. A little bit further. No? They're hitting it, but they're not filling me here down here at 20. Kind of on the edge of the profile, right? So on that one, yes, you know, yesterday I was complaining, oh, why are they not touching that one? I understand why they didn't do that one. It's a little bit too far out on the edge. First time here, I do watch. Oh, thank you very much, Torino. Somebody lost the house. Dude. So I have this indicator that when a price gets skipped, it draws a little box. And look at how much slippage there was on that initial spike. It's just absolutely insane. Oh my gosh. I mean, you typically tend to see that after news, but that is really, really excessive. And here now, 5 minutes after the news, liquidity still very light in the 10-year treasury. Oh, almost, come on. Yeah, that's the pulled orders one. In regular S&P 500 action, it can be really useful because it's a really strong, well, should I call it a really strong? There's a pretty good chance that you get a liquidity hole there and that they come back to it over and over again when they create one of those during like normal action, which it doesn't happen very often, but it does happen. Like I would say like every other day or something like that. So I was able to get that range there really well. This range still kind of makes me a little nervous. It's been across it a few times, so I don't think that it I should try and take it again. Oh, what are my it should just be the default. Let me see here. Let me pull it up. Yep, I have allowed volume 0 and minimum gap size 1. If you want to use the indicator on, like, say, the 10-year, then you'd probably want to change those, right? Like, still have minimum gap size 1, but you could have allowed volume be, like, 200 or something like that. So I'm still seeing some reluctance in 19. The VWAP. Oh, did I already have? I didn't intend to completely take the position off, but that's okay. I think that it's fine for me to take the position off. I'm kind of looking at this like, okay, so first of all, I'm not so sure if the S&P 500 should really be celebrating that one. But then we come back into this thing, which is, does it matter? Aren't they going to sell it anyways today? So I caught a good section of that range. I can be happy with that without having to really hold out on the bet that it goes all the way, you know. Yes, I just heard that SIVB halted for news pending. They gonna kill it? SVB financial trading halted for news pending. It's trading back and forth across this range here really well, I must say. I think I'm quite lucky that I was able to see that range and take it a few times. If they say something that's like, we got funding, everything is fine, those regional banks are just gonna rip face, man. I want to pull this up. Zions Bank is an interesting stock. What's better, Jigsaw or Bookmap? Well, I think that Jigsaw has the best DOM, and I'm not really a huge fan of the depth map chart. If you really like the depth map chart, then Bookmap has a better one. But I think the DOM is the more important thing. Bookmap's DOM is okay. I hear they recently improved it, but it's not as good as Jigsaw's. Okay. Well, it looks like that other contract would have gotten filled there. Man, my nose like itches super crazy at the moment for some reason. Jeez. Jeez. So Zions Bank closed yesterday at 41, and this morning they're down at 38. So pretty, and that was a pretty big drop from yesterday. So hedge funds are shorting this like crazy. If something, if they save this thing, I think that Zion is a really good play long. Like they're at 38, they could rip back up to 50. Yeah. I bet the options chain for that is like really crazy right now though. Okay, so it does seem like the flow is reversing and turning short in the treasury. Let's come over here to Zero Hedge and see. I'm sure that they have a story giving us a synopsis on the news. Yep, Silicone Valley Bank crashes 65%. Even though for now there seems to be little indication from a wider systemic risk from the distress surrounding Silicone Valley Bank, Bloomberg cross-asset strategist Van Ram notes that traders are selling anything associated with risk first and asking questions later. Euro area government bonds are rallying pretty much across the spectrum in the classic flight to safety, with German yields down about 12 basis points or more across the curve. 2-year U.S. Treasury yields are down a stunning 30 basis points from yesterday's highs. Ram reminds market participants that it's worth keeping in mind that banks' capital adequacy ratios have vastly improved in both the US and across the Atlantic after the global financial crisis. So what we are seeing at the moment with the financial markets is more one of blind panic, not one backed by anything that we know about the wider implications. The situation is different from 2008 when several lenders and financial institutions were in distress around the same time. However, as the Bloomberg strategist notes, like an unintended sideshow upstaging the main act, the saga around Silicone Valley Bank has pretty much eclipsed the typical limelight reserved for non-farm payrolls. That distress story means that the markets are likely to see an asymmetric reaction from the jobless data. A bigger rally in rates on a weaker than forecast print, and not so emphatic moves on any confirmation that the labor market is still tight. Interest rate traders who earlier this week were factoring in an 85% chance of a 50 basis point move from the Fed later this month now see a 74% chance. And it already came back down to 50. Clearly, markets' concerns have moved on from parsing the minutiae of non-farm payrolls to fears ripping through the SVB saga. Are there any other skeletons hidden in the cupboard, possibly in other corners of the real economy? Finally, for today's implied post-payrolls move, JP Morgan's Brom Kaplan estimates the options market is pricing a 1.4% move for the non-farms Friday on the S&P 500. Well, what are we at right now? ES 0.45. Mike Ferroli sees NFT to print around 200K. Yeah, that's not what happened. Yeah, I'm gonna go look. All right. Hold on a second. Are they like done something you can't get into Fidelity Active Trader Pro anymore? Because it's not letting me in. The expectation was that, well, so you gotta remember there's two parts to it, right? There's the household survey and there's the payroll survey. The payroll survey was quite a bit higher than expected. Almost 30% higher than expected. Or 50% more than expected. But the household survey said that unemployment ticked up 0.2%. So the rally, I think, I would assume, is them reading the household survey number. That has been a little bit more important lately. I'm gonna try one more time here. But when I try and log in, it just sends me to their web interface. What's with that? Yeah, it just sends me to the web interface. What's with that? Okay, well, I can come back over to here. Really? Wait, which strike am I looking at here? March 17th. 7 days. So there's not as many strikes as I would think that there would be, but 42.5, they're only asking for $1. I still haven't heard anything from SVB. I don't know. 43.5. It's really weird to me that they're only asking $1 for stuff within yesterday's range, but when you look at all of this, that's actually like where they're at and everything. That's not a very good price. But that might change when the S&P 500 opens, right? So yeah, so the expectation was 200,000, 225 jobs added, and we got 300. I feel like no, I took a sim trade up in there, but I made the decision that this is a little too wild to trade. I'm kind of I don't know. This seems to me like a situation where other people are unnecessarily fearful, and it might make sense to buy the dip of sorts, right? But we don't have to do anything yet. Yeah. Veroli thinks that the Fed will go a quarter point, but it's a close call. Pira Misra at TD said that this ramps up attention to next Tuesday's inflation report. It makes this the most important CPI report. Again, it really does. It really does. Okay, so how long has SVB been halted now? When are they going to say something? Mohammed El Arian now saying similar. This makes next week's CPI report even more influential for the Fed policy decision 12 days, and it's not a good thing given both the noise in the data series and the lagged effects of monetary policy. Highlights the need for stronger strategic and structural policy anchoring. Yeah, you know, I kind of feel like the next week's CPI report was going to be important no matter what. And I'm not really sure if what's happening today actually makes it more or less important, you know? Well, I'm just gonna keep this stuff open. How's this? Oh, I finished that. Yeah, I did that. I passed. It doesn't tell you what score you got, but I passed. So, I haven't done anything with it yet, but I passed. Oh, 9.5. Point of control from before the session. Well, I think the trade that I made I could have held it and would have been good. I didn't actually intend to get out of it, but like when it happened, I was like, oh, okay, whatever. I should have kept it. Oh well. And I'm seeing the like. Okay, so from the news, we were at like what, negative 25,000, and now we're at negative 52,000. So there's been 27K net contracts selling. I don't know. The part of me is like, okay, let's buy rates here and hope it goes further. And now I'm kind of like, Did you see the Tradeovate now charges 6? I'm not surprised. Yeah, no, because most of these platforms charge you for this stuff, right? Like one of the things that I was it was people are like, oh, get Sierra charts on. I'm like, well, I guess you can get VWAP for free on Sierra charts, but like to get the larger order flow stuff, it costs. Yeah. I'm sure that what they did was they said all order flow stuff will be 60, and they put VWAP, they lopped VWAP in there with it, right? But like, here's the bigger thing is that I'm just not into this web platform, man. Kind of makes me wonder what's going on with Fidelity though. If I try and get into Active Trader Pro, it doesn't let me in. It redirects me to the web interface when I try and log in. What's with that? I mean, I guess my read of the Tradeovate situation is that they're realizing that their business model isn't really working. That the whole, like, have them pay the monthly fee and then get cheaper commissions or not really get any commissions at all, isn't really making them more money. It's super tight. And they're basically in the same situation that every broker is. And so then what do you do? Well, you turn to trying to make money off of the platform. Because that's how Ninja Traders made their money, is from the platform, right? Not worth what happened with the live, yeah. And this is an issue this is kind of an interesting issue with a cloud platform that I don't think has been discussed when these solutions are brought up, is that if there's a problem with Ninja Trader, for instance, there's not going to necessarily be a problem with the software itself, right? Like if the software works and I've tested it and it works, right? What's going to have a problem? It's going to be my data provider, right? That's going to be my FCM. When you have a cloud platform, you're introducing another component that could fail. Now, supposedly, you would think that component would like never go down ever, but that's not what happened with Tradeovate. So I guess I'm just not a huge fan of the cloud platforms. I feel like that the cloud platform makes a lot of sense from like an engineer perspective and from like the people offering them. But from the customer's perspective, I'm not really sure that you're giving them all that much. Yes, but at least for Ninja, you buy the platform for 1K. Well, you don't even actually have to buy that. I mean, you just use the free version and execute somewhere else. Right. But paying $60 a month every month, yeah. But I like the thing that I don't think people I understand for doing that for VWAP is kind of silly, right? Because VWAP should just be a default included indicator in everything, right? But charging $30, $50, $60 a month for a platform is not unusual. It's really kind of par for the course. I think the bigger thing is if I'm gonna spend $50 a month on the platform like I do for Jigsaw, it's got to be the best, and Tradeovate is not that. So they came back up here. I'm gonna clear above us. Pretty steep retracement here now. It seems like some profit taking, perhaps. Okay. SVB Financial in talks to sell itself, reports CNBC. Yeah. Who is going to buy it? Wrong answers only, please. Elon Musk. Come on, of course it's going to be Elon Musk. Who else would it be? I guess Warren could buy it, maybe. I don't know if Warren would want to buy one of those. It doesn't sound like the kind of asset that Warren Buffett would be into buying. Throw 500 into a TD Ameritrade account and get, yeah. Chamath. Yes, you're right. It's going to be Chamath. 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 Oh. Dude, I think you're onto something. It's really fun because they're like wrong answers only, like what would be the funniest ones, and Chamath is like a really funny answer, but it's actually a reasonably likely one too. He would absolutely be interested in picking something like that up. Oh yeah, there you go. This guy says Elon Musk. Oh wait, the bank has already failed. There's nothing for Musk to do here. Alameda Research is interested. Okay, so as that's happening, let's see our proxy for small regional banks, Zion's Bank, my friends. I got some friends over there. Well, it's pre-market and everything, so I don't know if it's really trading volume or not, but I don't see significant change in that chart yet. So we'll see, I guess. Ian Shepherdson, by the way, the increase in the unemployment rate was statistically insignificant, as were the increases in participation, employment, and unemployment. So you can safely ignore all of the quote analysis of the household data as usual. Okay. So is this buy related to SVB is gonna sell itself? Because they haven't been able to raise capital? That's got to be it, right? You know what I can do here? I'm not going to trade the micros today, guys. I'm just not. So I'm going to leave this up here. And we're going to add SVB. Silicon Valley Financial. Wait, what is the freaking ticker? So today is the real contracts? No. Oh, well, I honestly, okay. I don't like to say this sort of stuff because then I think people will try and screw with me. SIVB. There we are. Okay. Well, that can't be right either because it's not. I guess it's been halt. I mean, that's the halt right there. Maybe they haven't opened it back up yet. What I'm looking for. So I think that the buy here in the treasuries probably was the Silicon Valley Bank financial news. I just can't confirm it because we're not really seeing anything over here in the stock. Yeah, it's been halted for a while. But that's got to be from them selling themselves. So I would anticipate Zions Bank to get hammered even further, right? So what I'm looking at here is just when I look at the options chain over here, for a $30 stock that's like moving really crazy right now, the prices that they're asking for the options are pretty cheap. Granted, that's a wide range, right? They're asking for 42.5. They're asking $1. And then you think about that and you say, well, so they need to get to 43.5. You know, that is yesterday's prices, but that's out there. So I want to see what those options are pricing at when we open. Because I think what could happen here is, especially since they are selling SVB, it seems like the hedge funds are piling in very, very quickly into these regional banks. So maybe today is not the right time to do it, but I think at some point I want to try and take Zion and hope that the hedge funds get squeezed. Because the thing is that there's not, this is like general fear and speculation and not like, oh, we know that this bank is under stress, this bank is under stress, etc., etc., etc. So yeah. Probably if we went further out, if we went to like April. Yeah, so when you go to April, they're asking for $2. So an extra $1 for that month, but still. I could get 40 calls for $3.50 and then it's just, I think that they'll be even cheaper than that when it opens because those are just like the prices when they closed, right? Now they're down at like 37. So all of that is going to come through. Remember a stop loss. Well, I will do it with an option, and I'll do it with a cheap option, right? The problem is just I'm kind of concerned that when it opens up, it won't make sense. I suppose you could do something with a spread here. So what if I bought 42.5s, just as an example? I know these aren't the prices that they would have, but so if I bought 42.5 and sold 45, buy that for $2 and sell that for $1. So my net position is $1. And then if if they're over 42.5, then I would make $250. So it's a 1-to-2 ratio on a spread that I think is pretty. So that one makes sense. That makes okay sense, at least. Although I think for the risk that, you know, the volatility that this stock is having and everything, it makes more sense to be buying them like a little bit out of the money and just spending 50 cents. Do it with a deep in the money. Oh geez. Okay, so I can't afford the deep in the money ones. So I was just quoting you April. Well, here, I'll pull it over here. Those were April prices. So 42 days to expiration. That's crazy that like, so for me to buy calls at like, to say, let's say 50. So wait, come back over here for a second. Okay. So for us to get back to, last week's prices, let's say, I could buy far out of the money calls for 50 cents, right? But to get like deep in the money calls that are like 90% deltas, like Akshay is saying, it's like $13,000. That's pretty crazy, dude. Do an open way out of price. I mean, I could come in and buy 50s for 0.05. Wait, let's see. Will it let me do that? Will it let me do that? Hold on a second. I have to do it off screen here because I don't want you to see certain information. I'm buying it for $5. If I got hit, that would be crazy. There's no way that anybody would hit that. Oh, just well, we shouldn't do one. We should do like we should do like 4. Wait, no. Is it saying no? Buy to open, 4 calls, limit the bid. Yep, max loss $20 plus $1 fee, preview order. This is funny. You have to put like 15,800 to buy an NQ contract as well, so that seems fair. This is funny. If this is going to be absolutely hilarious if I somehow get filled. Like, there's no way that's gonna fill. There's no way that's gonna fill. Okay, but I'm gonna click here. Options chain. Okay. To keep an eye on it right here. So I want to see what they do in 10 minutes here when they open. Oh, I am getting... Oh, not yet. Sorry. I got a little too excited there for a second. Do that 12K. Do that 12K strike SPX option for like $10 or whatever. That will literally be the most hilarious thing in the world. Maybe there's one of you out there. Probably not. So somebody dumb enough to come in and sell for 50 calls. Sorry, 50 strike calls for 5 cents. Go and sell 5 of them and fill it. That would be hilarious. I don't think that it's going to happen. There actually is reasonable volume over there, but like relatively speaking on this option chain, how actually this is really interesting how much, so there is so much activity in the puts, and like it's everything is like 3 or 4 times the amount of activity in the puts than in the calls. That's interesting. What if I add July into the mix here? Apply. Oh yeah, there's even more volume on the puts in July at 37.5. Interesting. Dollar is looking pretty, getting hammered pretty hard here. Oh, did you take a trade there, Uzi? That's a good one. If I had been looking at Twitter, I totally could have taken that one, but whatever. From 09? That's not bad. That's a big winner. It's a really big winner. I don't know. It makes me a little bit anxious when things are like really moving and it's like, oh, I could make money, but I know that like I'm likely to screw myself over in this situation, right? Interesting. Yeah, you probably could have held on. So question now is, are they gonna go for the highs again or not? I don't know. The things are so crazy. You really could just do just about anything, right? Need a cigarette. So if I come back over here to this buy to open, whatnot. Oh, okay. Yeah. It does show me what the size is. It's just not at the moment because it shows there's nothing in the queue. You need a cigarette. Was that a stressful trade, Uzi? I would have found that. Well, I mean, when it starts going, it goes. It goes. Good trade. Lungs don't repair like other parts of our bodies, really. Yeah, so my boss when I worked for Goldman, he was a smoker, and it was really curious to me. Like, you could really tell how stressed out he was, and like getting a cigarette would really reduce his stress, but it kind of makes you more vulnerable to the stress when it comes. It went good. It pulled all the way needed. Oh, wait. Where did you take it from? When did you take it from? From 09. You didn't have it from before the news, did you? I'm assuming that you took it like at 7 o'clock, like 30 minutes ago. Okay, it was around 9 your time, 7. Oh, I see. Like, you were really concerned about it getting filled. Because it kind of came up like really close to your exit and played around with you for a long time before they finally pushed and went a little bit higher. Yeah, no, don't worry about it. I can see where on the you got in where I thought you did. You got in where I thought. Good morning, Jacob. How are you? You ready for this? Okay, here they go. They are getting crushed here. These banks. Yep. Look at that. First thing out of the gate, and Zions Bank is getting crushed. I think that SVB may still be halted because I am not getting a price there for them. Okay. Well, nobody bought my option. Okay, so I think now I should be able to refresh this chain. Yes. Wow, it doesn't even show me 50 now in July. And let's show 20 strikes. Okay. I'm the only one. I'm the only one bidding 50 in April. It was in April, right? Yeah. 50. 005. Okay. So that's not, yeah. That sucks. What do you think? Am I wrong? I think that it like suddenly doesn't make sense. So we could buy 37.5. They are at what right now? 36.93. So 37.5 for $3 means that we need to get back to 40. Which is from the overnight prices. But yeah, it doesn't, I'm not so sure that one makes sense. Now, if we go to the ones that are like real close, the 7-day to expiration ones, I mean, you can see some volume there at 40, but let's refresh, see if it changes. See, the good prices would have been yesterday at the close, but you'd be underwater right now, right? So I'm not so sure that this makes sense now, this trade. I have not discussed the proposed tax on I haven't talked about Biden's budget at all. That wasn't even, that was like the headline a while ago. The one that everybody was talking about yesterday was just that they wanted to raise the capital gains tax, and I'm just like, ugh. Right? I don't know if there's really much of a point in us discussing the implications of the actual policy, because one, it's not going to happen. And two, I think you all already know what I would say about, you know, what they sell and the impact it has on the market and all of that sort of stuff. So I think the real takeaway from that story is just how blazingly transparent Biden is about how he plays politics, man. He just goes for the most, it's almost like a parody of the Democrat Party now, right? Yep. We're going to raise taxes on everybody, and then we're going to use it to plug the shortfall in Medicare or whatever. And is just like, he knows that his base is going to eat it up. He knows that nobody's going to actually, you know, that the policy is not actually going to happen. He probably knows that it's a bad policy. He just doesn't care. He's just playing the raw politics of it. I really think that when you play politics in that way, that it will come back and bite you in the end. But see, the risk that Joe Biden has right now, I don't know if this is ever something that he has to deal with. But like, let's say that Joe Biden somehow gained a second term and they got a majority in both houses again or something like that. And then you have to do something, right? And when your policy doesn't line up with all of this fresh meat that you've been sending your base, all of a sudden you're just like, they just eat you up. So for instance, Joe Biden made a change with their border policy because when they said, oh, we're not going to stop and arrest families if we find them, we're just going to catch and release. Right? Then what happened? That encouraged people to start trafficking children across the border. So after a what? 2 years of that, they finally realized this is really stupid and very damaging, and we can't allow this policy to go on anymore. So even though he spent all that time railing against it and all that stuff, he changed the policy, and now liberals are super pissed at him for that, right? And that's just like a tiny example. So if you do that with taxes and everything, yeah, it would really come back and hurt them in the long run. But they probably don't have to worry about that. I really don't think Biden will have a second term. I'm kind of wondering if he would even be able to run, you know? It's a weird world we live in, politically speaking. Well, the 5-year is breaching highs, man. Jeez. The 10-year still has a long way to go, but the 5 and the 30 are right there. Schwab getting collateral damage. Well, Zion's Bank is getting savaged here, man. Yeah, I've seen a lot of individuals ask if this would affect them, and once they learned probably not, they were okay with it. Well, so that's where they're wrong, Lucas. I guess I do have to talk about it. Yes, it would affect you. It would affect you because capital gains taxes means that less of the money is able to stay in the market. So what does that mean? Number one, that means more selling in the stocks that you own in your indexes and so forth. So your 401k, your IRA is not going to be as high as it otherwise would be because that money is coming out of the market and going to the government. And number two is it's going to be a drag on GDP. You have less investment. That means that your productivity gains are going to be slower. So the science on this is not very well established, but the general supply side economics theory goes that we would have lower GDP growth. I was getting a little excited there for all of this, but it's not. Yeah. Okay, so I'm going to turn July off here. All this pump and the bombs, it seems like that old negative correlation. Yep. So what it's saying right at the very beginning is that this is the first really, truly strong flight to safety bid in bonds that we've seen post-COVID. It's not the first time that we've seen a correlation like this, but like a really strong one where it was very clear that it was just flight to safety. Yeah. It's a little nerve-wracking, isn't it? Like, I mean, maybe I really should have done the play, because I remember when we came in here and we said, okay, it moves up. Number one, I'm not sure if that's the direction that they should really go based off of the economic numbers that we got, because I don't see how that helps the Federal Reserve be more dovish. Okay, but then that aside, the thing was, well, maybe it doesn't matter. Aren't they just going to sell it either way anyways because of Silicon Valley? Well, that was correct. And like, look, if you sold up here at the highs, man, 35, 40 points, 40 points ain't bad. That's a good winner on a MES contract, man. Okay, I don't think that they have Silicon Valley, I don't think that they've unlocked it yet, have they? Because my chart's still not showing anything over here. Where are we at right now? RTY is down 1.5%. Yeah, 2's leading the run. It is a steepener. It is a steepener. This is a flight to safety, recession imminent sort of a move. The thing in my mind, though, is still where it actually is the contagion, right? I mean, this is bad for anybody in venture capital and Silicon Valley, all of that, right? We're joking about Chamath buying them, but his wealth is going to be. I mean, how hard is it going to hurt those guys? Would they be able to buy? I don't know. It's a real question, right? But what's happening is the hedge funds are coming in and saying, well, we think that puts pressure on regional banks. Okay, so it's not like we know that Zions Bank has a problem now, right? I mean, maybe somebody knows, but as far as I can tell, it's speculative. They're speculating that there could be something, and they're going after them. Zions is a great place to play it because this is a regional bank that has relatively high beta, generally speaking, right? So that's why I was interested in watching it. I was like, well, maybe it would make sense to buy the dip if the options are that cheap. But clearly, the increase in implied volatility. So when we were looking at these to begin with, we were looking at implied volatilities in the 50s, right? And you had to get like really far out there before the implied volatility was like really over 100, right? But now like everything is over 100. Some of them are over 200. And so the options are considerably more expensive as a result. So you could have been, this is kind of funny, is that you could be long. Well, I guess it would depend on which price you got, but you could have been long some of these and made money potentially. You could have been long calls and made money from the increase in implied volatility. I don't think that you would have gotten those for cheaper, but still, it means that these this trade maybe doesn't make sense anymore. Because when we were looking, the thing that perked my interest was seeing 37.5s at like what, less than $1. But I can still hope, right? I can still hope that somebody comes in and buys my my 4 contracts at 5 cents. I don't think it's gonna happen. I'm sad. It makes me sad. What was the revision? Okay, good question, because I did not hear that. I think there were some revisions though, right? Okay, if the already jittery market needed another reason to be very confused today, it got it moments ago when the BLS reported February's jobs data, and which on one hand came in hotter than expected at the headline level, with some 311 jobs reportedly created in February, which, while was a drop from last year's downward revised 500K. Okay, so they revised it from like 550 to 500. So it was a downward revision, but it's still super high from last month, okay? That was well above the 225 consensus and was also above the whisper number of 250. The change in total non-farm payment for December was revised down by 2,100 from plus 260 to plus 239. And the change for January was revised down 13,000 from 517 to 504. Okay. With these revisions, employment gains in December and January combined were 34,000 lower than previously reported. Putting this number in context, this was a record 10th consecutive beat to consensus expectations. But while the headline payroll number was hotter than expected, driven mostly by the retail workers and waiters, the not-so-good data came from the unemployment rate, which unexpectedly jumped from 3.4 to 3.6, and above the 3.4 consensus estimate as the number of unemployed workers jumped from 5.694 million to 5.936 million, more than the number of employed workers, which increased from 160 to blah blah blah, while the labor force increased by 1.7 million workers in the last 3 months. Among the major worker groups, the unemployment rate for Hispanics increased in February. Unemployment rates for adult men, adult women, teenagers, whites, blacks, and Asians changed little over the month. Unemployment rate rose modestly from 62.4 to 62.5. Elsewhere, the infamous birth-death adjustments added 176K versus a decline of negative 144K in January. There's half of the modeled gain. There was also some relief in wage growth as average hourly earnings rose 0.2%, down from 0.3% in January and below the 0.3% consensus estimate. This translated to a 4.6% increase year over year, which was below the 4.7% consensus estimates. Oh man, there's so much more on this story, okay? So let's read. I'm gonna read. The number of job losers and persons who completed temporary jobs increased by 223,000 in February to 2.8 million. The number of persons jobless less than 5 weeks increased by 343,000. In February, the labor force participation rate was little changed. These measures have shown little net change since early 2022 and remain below their pre-pandemic February 2022 lows. It's like they're coming back here. The banks are still kind of flat here. I'm going to skip some of this. Bloomberg's chief economist Anna Wong says February's extremely strong jobs report exceeded expectations, and following January's blowout report means the Fed will likely follow through with Powell's statement in his semi-annual congressional testimony about accelerating the pace of rate hikes. That said, there are some signs of weakening in the print. Hours worked slow and average hourly earnings cooled faster than expected. There are consistent with our read that the labor market is softening. Still, with inflation elevated, the Fed will have to take in the data in this report at face value. We have upgraded our baseline to a 50 basis point hike at the March FOMC meeting. According to TD's securities strategist Pira Mirza, one of the reasons the market is sharply higher is because it is reacting to average hourly earnings coming in weaker than forecast. I guess it lowers the pressure on the Fed to go 50 basis points, but the labor market is still strong and wages are running at 4.6%, far greater than the 3.5% that the Fed needs. The Fed will not stop hiking until they see labor market weaken, so we think that the 2s and 10s curves should flatten. We should see the market keeping some risks of a 50 basis point hike in March. Not a bad report for risk assets, but financials loom larger. We stay long 10s here. Ugh. So, you're done till Wednesday. That's cool. I do kind of wonder. So let's come back to our longer term chart here and look at 2s and 10s, and you can see a pretty strong steepening happen since March 7th, I guess you could say. We'll have to see if there's more follow through on this on Monday, but I think that this is a great pullback for a flattener, don't you? I think that their call out for a trade there is not bad. Okay, here, however, KPMG chief economist Diane Swonk countered, don't get so excited about the slowdown in earnings as the payroll gain as more important. This keeps a 0.5 point hike on the table because of the sheer volume of paychecks that we're generating, which is buoying demand. At the end of the day, what the Fed is worried about is how strong demand is relative to supply. The issue is not wages, it's aggregate demand, and this is feeding into aggregate demand, which is buoying inflation. So, good point. According to Omer Sharif, founder of Inflation Insights, today's report is just what the Fed ordered. This report screams soft landing and looks to be a pretty good one for the Fed. If only the U.S. banking sector were screaming the same, says Zero Hedge. So that's their detailed read on the, yeah. Okay, so is SIVB ever going to be halted? Let's see here. NASDAQ halts. Current trading halts. It's SIVB, right? Yeah, 6:35 our time. And there is no resumption time on that, so that suggests to me that it is still halted. Zion's Bank is starting to come back up here. Their lowest was 35. Well, they went below 35. So let's come back and refresh our quotes and see if how the prices changed. So we're looking at the first out of the money set of calls, 245, then for April 390. Look at the spread there on the calls, man. The bid is 0.05 and the ask is 410. Jeez. Jeez, man. Boy, how does that make sense? I'm confused now. How is it that... okay, explain this to me. Maybe when you guys can take care of this one. Okay, how does it make sense that at 47.5 they're asking 111, but at 50 they're asking 410? Seems to me that those calls at 47.50 in Zion are underpriced. But it also seems like all of these ones down here are way overpriced. Dog shit volume, that's why, yeah. You're talking, I mean, in these strikes, there has been some pretty decent amount of volume over in here. Mostly selling the calls, by the way, at 40. But everything else is pretty light volume. Yeah. It really looks like there's nobody. So like right here at 50, right? So see how it's like 0.05? You know why that is? That's right. That's the I'm the market maker in the 50 strike calls, and it actually says you can't arb that. Yeah, it doesn't seem like it would make sense to try and take it. Like the issue is that the employed volatility is just too high, right? So I think that I identified a pretty good potential opportunity, but it looks like the market was already on top of it. So, oh well, I guess. Now, by the way, I feel like, well, I don't know. How do I feel about the S&P 500? Yesterday, we filled 4,000. So we're now 100 points lower from yesterday. But we're only about 20 points lower from where we were before the news. So the damage that has been done since the news is not that much. Granted, there was this huge rise all the way up to 39.40, which I'm still kind of like, I don't know why that one made sense, but somebody bought it. Well, the whole thing, very interesting. I suppose maybe next week these numbers could come back down. At that point, though, I think it would make more sense to buy the stock than it would be to try and play it with the options. It's funny how the ZB high of the day was evens. Yeah. Well, when they pulled off of those highs, I tell you what, when we get in these kinds of situations, when it pivots so quickly, right? It's not just like, oh, it ticks down. It's like it ticks down and then they instantly take it like 5 more ticks, right? Because all of the momentum traders are trying to trade each swing, and like if it even takes a step back, they're like, oh, it's flipping, we gotta go short now. Yeah. Today, though, has just been one of the most interesting days we've ever had, isn't it? I'm happy with my decision to not trade it because it's too volatile. I guess the correct call would have been short rates in the end, but I guess you could have made $50 in here somewhere, but there would have been a lot of drama in on it. I could have lost $50 too. I'm not entirely sure which. Well, okay, so what would I have done? I think that after the news, I definitely would have gone short, right? I definitely would. I mean, I did here in the treasuries, and we did get as low as what was it in the treasury? We did get as low as 112.09, right? The issue is, I'm not sure if I would have taken my profits at that point. And if it came back up here, I might not have been able to like really get out until like 19. So I don't think that I would have made any money on that trade. And then would I have had the balls to turn around and go long the treasuries and short the rates at that point? I don't think I would have. So I think that it was, in the end, it was good. So like, what information do we have that gives us an advantage over the market? This is the kind of situation where you would think that you're able to get those kinds of advantages, but this is also a kind of situation where we should probably expect price to just be very inefficient in general. So even if we do have something, it ends up not mattering because of the chaos and the noise. So I made the decision based on what the liquidity conditions were before the news that I wasn't going to trade it, and that was the correct decision for me. But I still want to know, when does SIVB get unhalted? Zion's Bank is back to its opening price. I mean, look, we could have just bought the stock and made $2 on it. What's that? How much is this thing actually moving here? 2 divided by 35. 5%. This is not bad. That's not a bad trade right there. To just get 5% on a day scalp in a stock. And who knows, maybe they go and they try and retrace this gap. Well, I think that as long as Silicon Valley Bank is the focus of the media attention and so forth, that it's probably going to go down and that whole sector is likely to get dragged down with it. So I don't know if trying to catch a long there in Zion would really, I mean, I guess here in this situation we could have scalped, but like, do I try and hold it for the gap close? I think there's a large amount of risk in trying to do that. Man, treasuries are still pretty wild here, huh? You know, by the way, while I'm thinking about it, I wanted to do something on this source. Do I want? There we go. I come to this one. And you can see a little bit of a difference. Not enough to... I was wondering if the resizing, scale filtering and stuff would change the look of the camera much. Kind of changes it a little bit, but you guys probably can't tell. I do have... One of the things that I run into is that, like, if I just use it as a straight webcam, it has me too dark. Like, this is what we should be. That's the lighting on that is a little bit better. Is there any value in following delta hedging? And well, yeah, for sure. I mean, especially when you can find situations where at certain prices the delta and gamma exposure of market makers shifts dramatically, then you can get these points where, depending on whether they're short or long gamma, it can either constrain price or it can cause like a further puke, right? 0 day to expiration options has been like a really big driver of markets. So I would think that if I'm trying to follow the order flows in the equity markets, I would have to be able to follow the flows of the 0 day to expiration options as well. But how I can potentially use those to predict order flows, I'm not so sure. So it kind of seems like one of those things that you'll see it as it's happening and everything, and it'll help you understand what's going on, but it doesn't necessarily help you predict what the next set of 0 day to expiration options are going to be. Okay, well, Zions Bank maybe took a little turn there. I checked out Spot Scheme. Oh, well, so they do have... Okay, so here's what you want, right? Going back to the video, is there are going to be prices where the market makers go long or short gamma. So what do we mean? When we go short, when the market maker is short gamma, that means that when price starts falling, they have to hedge it. That means that they have to sell into the selling more. So that will exacerbate the move. So just as an example, you could get something where spot gamma will say that the market shifts to negative gamma at 3,900, for instance, right? What that means is a meaningful break of 3,900 will probably cause acceleration. So then you could go short at that point, right? Whereas if there were long gamma and the maximum long gamma is at like 3,900, that kind of makes it difficult to get away from that spot, if not like cause reversals there, right? So those points can provide critical points where the market flows will shift, right? But it's still only going to be like one component of everything else that you need to keep an eye on in equities. In this particular situation, I don't know if it really helps you, right? Yeah, it is like $100 for a month, isn't it? You're right. And this is one of the problems that I continually see over and over again, is that like I'll find things where there's certain pieces of information that could really give you a significant leg up in an instrument, but it's not worth the data that you pay for it. So it's like I found some things in the treasuries that, like, you know, like you could go and buy a Bloomberg terminal, for instance, right? Okay, cool. But are you going to make money from trading 10-year treasuries with a Bloomberg terminal? Enough to justify owning the terminal? I guess you might be able to pay it back, but I don't know. Like, that's a huge expense for a small retail trader, you know? Everything. The Bloomberg terminal basically gives you access to like every piece of data that you could possibly think of. Right. So this is one of those examples of where large institution just has a really huge advantage on you, right? Because to them, the cost of a Bloomberg terminal is a trivial thing, right? And they're trading bigger stuff anyways, but then they can kind of use that extra information and go and trade it on small things too, just for the hell of it, I guess. So you know what I mean? Like, it really brings the barrier of entry like really high. It just means that when we're looking for public information that we can trade off of, you have to dig really, really hard, and you got to be really discerning about when you decide to take it, right? Because the situations where we really have a big enough advantage on those big guys are pretty narrow, right? Non-farms like this would be one of those places. It's just that there's so much chaos around that I don't know if it's worth playing. No, only one people liked my tweet earlier. Let's come back here and check our options chain. It's now been about 10-20 minutes. Okay, so we're back to kind of where we were. Looks like the implied volatility on these has died down a little bit. Man, can you believe that? So if we had gotten our trade, okay, if we had gotten our fill at 50, right, for 5 cents, which we definitely did not. Yep, it's still sitting there. I'm gonna leave it. I'm gonna leave it open until the close, just for the hell of it. Okay, I'm just gonna leave it there. But if we had gotten it, we would now be, they are now bidding 55. So we could hit back into it. We could probably hit back into it for a 10x gain. we could sell back into it and make 200. Well, 180, we would have a profit of 180 at this point, right? Can you imagine if it gets to the point where like they're like $4 and stuff? Ooh. That would be a really good options trade. That would be like $20 into $1,000 or something. No, what would it actually be? $400 minus 2380. Why did I need to pull out a calculator to do that? Anyways. Yeah, the cumulative delta for the pit flipped around. That is pretty crazy. This long is almost 50,000 contracts in the 10-year. Excuse me. It seems to me, I don't think that this flight to safety thing is going to die down this session, do you? That's not to say buy the 10-year treasury, because they may kind of settle here. But like if I'm looking for a reversal or something like that, I don't think it's going to happen today. Even though Zion's Bank is doing what I wanted it to, man. Doing what I wanted it to. Is Zion Bank in the what? In the Matrix? What? So when I first started trading back in 2008, you know, I was into all the banks, really was what it was. And like I remember thinking liking Wells Fargo and making a bunch of money on Wells Fargo between October and December on like my first sim accounts. It's really sad for me to see how far Wells Fargo has come since then, because after that they just turned into the most awful bank, man. Okay, but so one that I've always kept an eye on is Zion, because Zion has like a really high beta, and for many years there. So like if I come back and I do like a 1 day chart on this thing, and like we really come back, right? Okay, like there was for all this time where they were only like $15 and stuff, right? This was around the time that I was looking at it. It was like $15, and like, look, you made almost double 4x. You almost 4x'd your money on that one, right? And then look, since 2020, you could have bought it in 2020 and you would have more than doubled your money, right? So then here you get in this thing where like they are selling the banks crazy hard, right? These regional banks, and Zion is a good bank. I think they do good work over there, and I've had some insight into it because I have there's a lot of movement between Goldman and Zion's bank in Utah, because Goldman has a lot of ops over here, and so sometimes the people will go over and work at Zion. Like I had this girl that I dated for a while that you know, we didn't really have that great of a connection, but she made a good connection with my friend, and they got married and it worked out and it was really great. So we still get to hang out sometimes. And she left Goldman and went to work for Zion, for instance. So no, I that's why when I heard that they were going after the regional banks, that was my first thought. Is like, oh, Zion's like, we got to go and see what they're doing. Oh, did they? Oh, wait, hold on. No, they haven't. I was about to get excited. I was like, did they unhalt SIVB? Nope, they did not. They did not. Still halted. There's actually some other ones out here that are not halted, or not unhalted. Not ones that have been open for as long. Oh no, wait. CLAA. Colonnade Acquisition Corp warrants. There are some that are still halted from like yesterday, apparently. So far, though, this rally in Zion from 35 to 40, that's like a 25% gain, man. It's not bad. So if we come back over here and think about this, if we were looking at 40s, they're asking $4 for it right now. $4.50, in fact. So I suppose you might have been able to make $150 from the option, but it's really not the scenario that I've been thinking about, you know? Like, I want the one where like you buy it for $1 and then it ends up being worth $5 or something like that. seems to me like, well, you could still buy 50s. So now they're only offering $1 for 50s. I don't know if that one makes sense though, because, well, the implied volatility on that contract is 67.88. But I think the issue is that we're likely to come up to 50 and stay there. You know, that might be like a target. So you don't actually make money unless it really starts to get over 51. Yeah, I don't know if that one really makes sense. Don't know if any of these really make sense, to be honest with you. I find that disappointing. I was starting to get excited, like we might have a good options trade available to us, but I don't think so. U.S. Treasury Secretary Yellen says the U.S. Treasury is watching, quote, a few banks amid issues at SVB. Treasuries look kind of pointing down a little bit again. I wonder, how is my larger portfolio doing today? Because I bet you I did okay on silver. Nope. Oh, that's kind of sad. Well, I am making money on silver, but it's up 3%, but apparently that's only $7 for me. This is actually better than it. This is actually a lot better than it. So I'm losing. Berkshire is down 0.44 and Goldman is down 2.64. So Goldman is down quite a bit today, but it's not really hitting me. And rare earth elements is up. That one's a little weird. So can we switch some of these a little bit? Let's just check out what GS is doing. So because if we go from a daily perspective, okay, so they are getting hammered, but like not nearly as bad as some of these other banks. If so, for instance, let's add JP Morgan. Same percentage scale. And we got to like, how do I do this? Okay, so when we come into the most recent action, like the past week, JP Morgan has gotten hammered pretty hard compared to Goldman. But the part of that is because Goldman got hammered really hard over here, right? Through this. So in the larger scheme of things, you're maybe not necessarily winning with Goldman. Oh, actually you are over the course of like 2 years. But like starting from 2023, they're about even. Okay, so now what's going on with REMF? Because that stock has been just like dead. Oh. Headlines. No, that's not right. That's weird. It shows me that little like news headlines sort of a thing, and almost as though like there is a headline today, but I'm not seeing it. I think that there may have been some shorts coming in here, and maybe there's some short covering, but let's come over to Yahoo. Oops. No news pointing out over there. Probably not anything on the conversations as well. REEMF. Come over to Google and we'll say past 24 hours. So I see some like quotes and stuff. News. Nothing. Oh, here was, no, that's 2022. Our rare earth resources stock crossed below the 50-day moving average during trading on Thursday. Stock has a 50-day moving average of 0.37 and traded as low as 0.32. Okay, so it could be bouncing off of the moving average, or perhaps. It's likely to come back to 40 cents and then just sit there again, right? Like, I'm not quite sure why you wouldn't, yeah. Rid of that, why it wouldn't just come back. Oh, sorry, 37 cents, 38. You know, it's just been sitting there for a long time, and why wouldn't it just continue to sit there? But we'll see. Yeah, the design look not too bad, man. I think even though we weren't able to play with options and everything, I made a good pick. I made a really good pick. Whoa, what? Okay, so the news, what I just heard on my news squawk is that SIVB is telling employees to work from home for now. Okay. Okay, that's, What does that mean anything? That's a little, Does seem a little soft sus, doesn't it? I'm gonna close TD Ameritrade here. I don't want to tease myself with the options anymore. He's just giving me options blue balls. Like, oh boy, yeah. GOP presidential field rallies around one idea: declared drug cartels terrorists, because Joe Biden said they're absolutely not going to do that. Yep. Treasury yields plunge most since Lehman. Gold soars amid dovish dive in Fed expectations. I don't know, like gold and silver aren't actually doing that great right now. Like, they're still down so much. So what is it? What is it that I have? SI, I think it is. Yeah. I mean, maybe there's something wrong with this stock and it's not the silver itself. Because is not silver up today? It is. It's up to 20 cents. Why wouldn't they be up today? Let's research that. SI. Is there something going on in this one? Is this not the one that I should be looking at for silver? Oh, I don't think most understand that Silvergate Bank is liquidating. However, Silvergate Capital will remain in business. That's the reason why it's holding between $3 and $4 and doesn't seem to move at all. Ooh. I see. So we really shouldn't be looking at that one for silver, should we? We should be looking at, well, I don't know. What would be a good, we'll look around for an alternative here. I didn't realize that they were related to these other Silvergate guys. That's funny. Wait, do I have the wrong... Am I looking at the wrong thing here? Hold on. I think I'm pulling up the wrong... Yes, you're right. That's right. Silver... SI is Silvergate. I'm thinking of AG. What I want to look at is AG. There we go. Okay. First Majestic Silver Corporation. Okay, so now when we come on to a daily, okay, well, they are getting a little bit of a boost today, but it's not, doesn't really make up for the silver just getting absolutely destroyed from back here. But is it like, is this one still, that seems a little bit extreme to me. Is it the case that SI, the future, is not same percentage scale? Line. It is dramatically underperforming silver itself. What's with that? Oh, it's since this over here, since this big jump over here, it has been. But at one point, oh no, silver's been outperforming it the whole time. Why is it underperforming silver itself by so much? Sometimes these conversations and stuff are really useful. Lags estimates. So I guess the company is just not doing very well compared to its peers. There's a couple of different ones that we could try and use. Apparently there was somebody that was really bearish that stock that everybody's trying to give them a hard time. They've been diluting shareholders. I think that a lot of this is just because we've been in a bad market and everything, but it's super what I hate it when I'm reaching for words, you know. I kind of find it like disenchanting how many companies have just like outright screwed over their shareholders during this downturn in the past year and a half, you know. Like a lot of these meme stocks in particular like really took advantage of their investors, I think. I mean, if this decline in yields is like a real thing because like there's some contagion in the market, okay? So like again, we got to remember that we don't have any direct knowledge or anything of any kind of like really clear contagion, like why Zions Bank would be hit, for instance, from this. So this could all blow over really quickly, right? But if it doesn't, if there's really something to this, then I really think silver is the place to be. Yeah. Silver is the place to be. What about garlic coins? Should we look? Now we've looked at pretty much everything that I've ever put anything into. I liquidated a bunch of positions a while ago. So I still have some silver. I only have like $250 of silver, but most of my money is in Berkshire and Goldman. And then I still have about 20% of my portfolio in cash that I could put into something. Surprising how unsophisticated they are, basically. Dude, so I don't know why you're talking about that, but the cryptocurrency market's reaction to Bitcoin dropping to 2,000 last night was like really apoplectic. Like they were really freaking out. I mean, it must be because these guys that are still trading it are probably like really leveraging into it. And there probably are some whales out there that are in a really tough spot. Because this move up was like that we've had at the beginning of the year here in the past 3 months is like on my valuation metrics really extreme. Right? So yeah, the sentiment that I got from the cryptocurrency market was really negative last night. And the issue is there could be so much more stuff coming through and like problems and stuff. Okay, anyways, coin market cap. We can go and look at garlic coin. I'm sure that garlic coin is probably in the same place that it was. Except for, you know, down along with the overall market. Down 12% actually. Oh, interesting. So that's towards the lower end of this range. It's actually been up as high as 0.17. That's interesting. I don't have my I haven't looked at what it is in such a long time. it's still sitting at 1 cent, huh? Interesting. Then explain why it's so much people prop up Bitcoin. It is. It's like Sailor is literally just doing a blazingly transparent pump and dump for sure. 100%. 100%. It's like he literally told people to mortgage their house on Bitcoin towards the top. Like, you know what I need here is I need another trading view. I so much prefer to use TradingView for like long-term charts. Okay, what is the name of his MSTR? Right, stocks, MicroStrategy. Ooh. Yeah, that one doesn't look too good. Oh. So I had been looking at it over here at like when it was up here, I was looking at shorting it and it didn't make sense. Yeah, I don't think that would have made money, but oh well. If I refresh this, is it going to switch to MSTR? Nope. Oh, that's good. I'm fine. Cool. Sometimes I'm tempted to like, we should get TradingView Pro again. They're good. It's funny that you mentioned Garlic Coin because I was researching them a little bit last night, but I didn't actually look at what the price was because their community has been trying to do things to get more interest in stuff. So apparently people had expressed interest in staking it. I don't know if that really makes sense, especially since the whole thing is it's a proof of work coin. So how do you work that all out and everything? But they might do something with it. I mean that the project's not dead. People are stepping in and trying to do stuff. So maybe someday Garlic Coin still could be a thing. Maybe, possibly. I wish. Mostly I wish. Yeah. Oh well. Well, them treasuries are just kind of knocking on the highs still. Where are our yields at now? Are we back to 3.5 yet? No, but we're at 3.7. Can you imagine if we had gone short at 4? It was only at 4% very briefly, wasn't it? 30 basis point drop. Wowzer. And it looks like they're still going pretty hard. Well, you know that as soon as I get involved in it, then it's gonna stop, right? But this is showing really, really strong trending action for sure. That's funny. Silver. So on my watch list here, silver is the biggest winner. I am making money on my silver today. And in fact, I'm making almost 4%. It's just that my position in it is so small that it's pretty trivial, unfortunately. Look at that. let's pull this. Let's minimize this since we're still not getting SIVB yet. It's another basis point. Well, they might be backing off. They might come back to this 04. Let's see. So I'm not hearing a whole lot from my news squawk this morning, but... Okay, Forex, let's read this story here. So, Forex Live, what's the second line of defense in the regional bank route? To use a Ukraine war analogy, if Silicone Bank is Solidar, then First Republic Bank is Bakhmut. First Republic is a similar line of business to Silicon Valley Bank, and as you can see, its shares have also plunged. But there's been an intraday turnaround today in RFC of about 80% and a sign that it could be sold or that it's not facing the same kind of problems. The issue is that the bank run can accelerate at any time. If you were a company with millions in First Republic, would you leave your money in it? If First Regional suffers the same fate that Silicon Valley faces, then there's the possibility of real contagion. Now, the market has already sensed that, but after an early rout, the regional US bank ETF has trimmed its losses to 3.4%. That's not a pretty chart, and it's the worst week in 15 years. The good news is that the Fed put is showing itself. If not for a 40 basis point shift lower in the Fed funds futures pricing, the market would be in much worse shape right now. Oh yeah. One of the relief valves for that, though, is the US dollar, and the market is now pricing in a lower terminal rate, and that makes dollar holdings less attractive. In any case, like the Ukraine war, this could swing either way right now. That's why people are watching First Regional like they're watching Bakhmut. That Bakhmut thing is, I'm surprised it's still going on. I say that every day, but I'm like, weren't they supposed to break through like last week? What's going, it's not happening. Must not be going as well for the Russians there as they try and make it out. Oh, you know what? I'm just noticing something. My camera was not charging, so it was getting close to dying. All this talk makes me want to go and make fun of cryptocurrency stuff. Reddit.com/r/buttcoin. What do they got here for us today? Happy FUD Friday. U.S. Treasury Department proposes 30% excise tax on crypto mining firms. What? Really? Oh, that would really suck. That 30% tax on crypto mining profits? Oy. Oy, oy. U.S. government files appeal to block Binance U.S. from acquiring bankrupt crypto lender Voyager Digital assets for $1 billion. Calls for taxpayer-led bailout of Silicon Valley. I don't think it's going to happen, man. Yeah. It really does come down to this. These guys were involved in crypto stuff. So even though it doesn't play out the way that we thought it was going to, because the place where we first started to see this kind of Bitcoin contagion thing was with Tesla, when Tesla started to become highly correlated to Bitcoin, right? But it's still just the same. We are in a situation where it seems to me that it was a mistake to allow cryptocurrency stuff into regular companies. I'm never going to be completely satisfied until until MicroStrategy is worth 0. And Mr. Man, you're trying to go on. I'm trying to go on a rant. I'm trying to get all, you know, all of that hidden angst about how much I dislike cryptocurrencies just out, you know, and then you can't remember Michael Saylor's name. I will not be happy until MicroStrategy is worth 0 and Michael Saylor is behind bars. That's what I want. And I want to make money off of it too. It would be nice if I could make money off of it too, but I don't know if that it seems like it's too expensive to play in that field. Anyways. Morale is low, man. The copium cannons. Okay, so yeah, they pull up that. This is what I'm looking for. Okay, from Derp Jungler. 3 reasons why I love the recent crypto crash. Fake pumps equals lost money. We need to flush the dirt. Well, that's true. Oh, I can buy it. It's cheaper. Yeah. The cope will not help for it to go up. What will? Asking for a friend, selling all your coins and forgetting about this scam. That, I can't believe that that's a comment in r/cryptocurrency. Holy crap. Black Friday has come early this year. Bargains everywhere. Yeah, it's a good to buy for those with any dollars left, I'm sure. Yeah, the decline doesn't necessarily flush out the trash. Yeah, it's a 10% decline. It's not good. It's certainly not good. Wow, New York goes after KU coin? Well, it's been a long session today, guys. I'm gonna be really interested. The thing I'm focused on right now is what is that 10-year note going to be on Monday? Because the whole thing has been, right? Oh, by the way, did I turn my camera off here? Hold on a second. Oh, that's why. Oh. That's weird. Anyways. Okay, so what happened was that's actually kind of funny. So look at that. You can see the difference in the quality. I do this. So what happened was I was using the if you use the USB cable to go into the computer for the camera, then I can use it like a webcam for like a meeting or whatever. And I had a meeting yesterday. And I forgot to unplug it so that you get the 4K. So 4K does look better over here, right? And so what happened there was I unplugged it from my computer and plugged it into the battery bank, and that's why it froze. And I didn't realize the way that I had things set up and everything had it so that, yeah. So now that makes me wonder. Coming back over to here, blending mode or scale filtering. Area is better. Disabled versus area is better. Yeah. Afterlife Seth talking to us. Yeah. Okay. So anyways, where were we? So it's funny the way that this is all worked out in the treasuries. Because remember when we were at like 3.5, right? We were at 3.5 because it was like, oh, the Federal Reserve is going to back off and all of these things. And then it was like, oh, yeah, but employment still looks really strong. So maybe they have to raise rates higher than that. So then we went back up to 4%. And now it looks like we're going all the way back to 3.5 because of concerns about banking contagion. And the thing that I find funny about it all is that there's still this analysis out there this is not like an outlier thing, by the way, okay? Like everybody's calling BS on some of these employment numbers. Supposedly this is the last month where their revisions will be able to be like super strong and everything. But you know, was this whole like, oh, the numbers like the employment numbers being really good, was that just an aberration that was only going to last for like 3 months and then we're coming back down? You know? So that's why we're so interested in what the rate will be on Monday. Because here today, it's like there's fear out there in the market and everything. Everybody just makes their moves and asks questions later, right? But where does that shift from here? Does it have legs, or is it just like a one day, oh, like we're really scared, but now everything's fine, everything over the weekend goes okay? Or does this turn into like 2008 again, you know? And then everybody's like, yep, so it's all cryptocurrency's fault. It is quiet though. It's not many of you guys left because it's Friday, so I don't blame you for leaving. We didn't do anything that interesting today. Well, we did though. I mean, I did a bunch of stuff. I looked at a bunch of stocks and stuff. Should employment be an important? Yes, because in order to reduce inflation, you kind of have to hammer employment, because it's really about what is the aggregate demand, right? So on my TikTok yesterday, I had made a TikTok about inflation, and somebody was like, no, it's companies, being greedy, right? Because the companies were making money before inflation became a thing. And I just was like, it boggles my mind. Like, I have a hard time understanding what these guys are thinking. Like, there's this group of Democrats out there that their economic knowledge is just so basic that it's like I can't even converse with them because they just don't understand what I'm saying, right? Like, how does he get that? Let's follow the sequence of events. COVID happens. Federal Reserve printed a ton of money. Congress printed a ton of money. People buy tons of stuff. And by the way, this guy was like, well, how are people buying? Why aren't people? Nobody has any money to buy anything. How can there be inflation? No, people had money to buy anything. Do you guys not remember? Was I the only one that saw this all going on? Like, do you not remember going to Walmart and them literally littering the aisles with TVs? Yes, the government gave people a paycheck, and most people went out and bought a TV with it. No joke. Most people went out and bought a TV with it. Can you believe that? Okay, this happened, and the amount of stuff that we were importing into the United States and the amount of like consumer spending was 20% more than it was before COVID. Okay, people bought stuff. People don't remember this. Okay, so what happens when you buy stuff? Companies make money. And this is where all of these outsized profits are coming from. Yeah, because companies sold a lot of stuff. And what happens when you do that? Well, they run out of inventory, right? So if you're a company, you run out of inventory and then you're kind of hosed, right? It's like, well, yeah, we sold everything, we made money, but now we can't make any more money and we're kind of screwed for the near future. So what do you do to protect yourself against that? You raise your prices so that you don't run out of inventory, right? Okay, so I don't understand how they think. It's like, yes, corporations rose their prices. They think that the printing the money had nothing to do with that. I just don't. They think that, yes, the government printed a lot of money, but that doesn't matter, and that's just kind of its own thing. And then over here, corporations just all of a sudden decided that they were going to be more greedy. It's just, how do people think like this? I don't get it. So I'm going to try and make a video about it to try and explain to this guy why he's wrong. I feel we should accept a little period of deflation that wrecks employment for some time. Well, that's what you're going to get. Probably. Word on the street is bottle girls are getting hit the hardest. I do. Do you guys remember that, like, that first week of the pandemic, and it seemed like a lot of people just spent the whole week drinking? That happened. It's alarming to me that the world is already forgetting about a lot of the things that happened during the depths of the pandemic. Some of it is like they're inconvenient politically, and so they just pretend that it's not happening. But some of it is really like, I guess people just weren't paying attention. They didn't know that like, did you catch this thing the other day where they were like, lockdowns weren't actually a thing? Hell yes, they were a thing. If I went down to Salt Lake and I was outside without a mask, you'd get arrested. Like, they would straight up arrest you. And you're telling me that lockdowns weren't a thing? Come on. It's like, of course, politicians and stuff always try and change history, but they're like trying to change history from stuff that happened like, not even, 1 or 2 years ago now. Yeah, I have a memory that lasts more than just a week, folks. That's the... Apparently some people don't. Well, I am seeing gold maybe take a little break here, so... I think it's time for me to get going. The S&P 500 is recovering some of its losses, so that's interesting. You know what would be the funniest thing? Yet Republicans want to defund it. Yeah, that one also. Oh man. Biden has been really turned into like one of the most divisive forces ever. Like, I don't think that people realize what's going on under the covers that's kind of destroying unity in our country with Biden, just because it's not like somebody getting on TV and saying bad things, but like some of his policies are going to be real problems in the future. Okay. I'll see you guys Monday. Stay X.